The crypto market is soaring at the moment, with Bitcoin up over 20% from the lows that it put in a couple of days ago. And this does come in the middle of the third US bank collapsing since the beginning of March. We've also seen Circle's USDC, the second largest stablecoin, regain its peg at $1, while the Binance CEO CZ has hinted at potentially buying some of these bankrupt banks, bridging the gap between crypto and traditional finance. We're going to break all that down for you in this video. What is up, everyone, and welcome back to the Everything Crypto Show, where we keep you up to speed on the most important news moving the crypto markets. Now, before we hop into the content, make sure to hit that sub, like, and notification bell if you have not already, and join the Everything Crypto squad. And I do also want to hit you guys with the question of the day. So, do you feel more safe with your money in Bitcoin or in a bank? Let me know in the YouTube comments down below. And based on the price action we have seen over the past couple of days, I do think a lot of people are beginning to realize that Bitcoin is a very safe alternative to having your money in a bank, where you do have true ownership of your assets. That is because we have actually seen Bitcoin rip from the 2018 all-time high of 20,000, now currently sitting above 24,000, coming in for a retest of the 50-week moving average. And if we do see a breakout at this level, it could lead to a very explosive move to the upside. So if you guys have been with the channel, even just for the past couple of weeks alone, you would have seen this move coming, because we actually spoke about Bitcoin making a retest of $20,000 after we saw a nice double top rejection here on the weekly candle closing on February 13th, and then once again on February 20th. This also coincided with failure to get above the 50 and 200 week moving average, as well as breaking out above 25k, which is a key area on the chart right now. And therefore, I did think it was likely that Bitcoin would come in for a retest of its previous bull run all-time high sitting at 20k. And honestly, now that we have seen a retracement of this move, I do think that Bitcoin is primed for a move to the upside, especially with what we have been seeing from these US banks. I mean, this is pretty much exactly what Bitcoin was built for. So before we actually see a continuation of this move, the one thing that I am looking for is for Bitcoin to close above the 200-week moving average. And this currently sits at $25,200. We are currently above the 50-week moving average at 23.3k. And the second key area of resistance is that 200-week MA, once again sitting just above $25,000. And if you guys want to have a better understanding of why this technical area is so important for Bitcoin, I'm going to zoom out on a log scale and show you guys. Actually, you know what I'm going to do? I'm going to pull up the 200-week heat map for you, so you can actually see just more clearly why this technical indicator is very important to the price action of Bitcoin, and why it is one that we have been focusing on ever since we broke below it last June. So you can see here that the blue line is the 200-week, and this is the price of Bitcoin here on the dot points. And pretty much every time Bitcoin has tested this 200-week moving average, it has historically made for some very juicy buying opportunities. Back here in 2011, the 200-week MA was sitting at about $2. Bitcoin was closed at about $3, and from there it ripped all the way from 2011 to 2014 up to over $1,000. So from $3 up to $1,000, then once again hitting the 200-week MA in 2015 around the $230 range, ripping to the previous bull run all-time highs of $20,000. In 2019, Bitcoin hit the 200-week MA in and around the $3,500 range, and then proceeded to rally to $14,000 the same year. In 2020, once again, we saw Bitcoin hit the 200-week MA in around the $5,500 range, and this led Bitcoin to the previous bull run all-time highs in 2021 of over $69,000. Now, take note of what happened in the most recent bear market here. Bitcoin actually broke below the 200-week MA for the first time in history on the weekly candles, and has not been able to get above it since. We have actually been fighting to get back above this level since June of last year, and that does pretty much indicate that what once acted as a strong area of support will now act as a very strong level of resistance, as it has. But this means that if Bitcoin is able to get above this level, we will see a very explosive move. And if we do get above 25,000 this week, I think that $30,000 is back on the table. Now, as for Ethereum, similar to Bitcoin, we call for a retracement down to the 2018 bull run all-time high, which sits at 1400. We saw Ether bounce off this level perfectly here, get support here on the weekly candle, and now is back on its way to the upside, currently sitting at 1670. Now, just like Bitcoin, we are not in clear skies yet. I do need to see Ether actually break above the 50-week moving average sitting at 1636. And although we are above it at the moment, I would need to see a close on the weekly candle here. So on Sunday, we would need to stay above this level. And the big area of resistance for Ethereum sits at about 1730, as once again, just like Bitcoin, we did see a nice double top rejection here. I mean, not so nice, but it was a clean double top rejection, which did indicate to me that we were not ready for a breakout yet. But this time might be different as people are buying crypto. The market is pumping. So if Ether does get above 1730, I think that $2,000 is back on the table. And that is where we actually saw some resistance on the pre-merge hype last year during the bear market. Now, prices for crypto are going up. We're going to actually go ahead and take a look at the crypto bubble so you guys can see that it's not just Bitcoin and Ethereum. Pretty much the entire crypto market at the moment is responding well to this news, despite the fact that traditional finance is collapsing. I mean, this is exactly what crypto was all about, offering a better alternative to the traditional finance system, which if you didn't believe was broken prior, I mean, you must believe it after what we have seen of the past couple of weeks here. And interesting, something else I do want to note is although altcoins are ripping, Bitcoin dominance is also ripping, and this indicates that people are beginning to understand the value proposition that Bitcoin does have when compared to the rest of the crypto market. It is only the failure of these centralized entities that have really been to the detriment of the crypto market, like FTX, like Voyager, like Celsius, and the same thing can be said for the centralized banks that are now collapsing. Bitcoin is true decentralization, something I think a lot more people are now really respecting when it comes to Bitcoin, and therefore I do expect Bitcoin dominance to continue to rise. That is why, even though I am holding Bitcoin as my second largest position and Ether as my first largest position, I do still believe that Bitcoin will remain the king of crypto for the foreseeable future. And the price action is ripping. At the same time, we also have the actual fundamentals of both Bitcoin and Ethereum improving as well. We can see here that the Bitcoin total hash rate is pretty much in all-time high territory, and this is bullish because it indicates that more miners than ever are fighting to validate their piece of the network to get that Bitcoin as a block reward. Coming in here on December 27th of last year, the 7-day moving average on the hash rate came in at about 224 million, now currently sitting at 316 million, so just under a 50% increase here in the past couple of months alone to the Bitcoin hash rate. And at the same time that the Bitcoin hash rate is in all-time high territory, the Ether supply since the transition to proof of stake, it is in all-time low territory. In the past 179 days, 62,400 Ether has been burned from the flow completely, bringing us to a current supply of 120.4 million. If we had stayed under proof of work here, the Ether supply would actually be sitting at 122.5 million. So this is the power of the transition to proof of stake, a big reason that I believe Ether will be incredibly dominant in the next bull run still, as it is now a deflationary asset when we do see some sustained on-chain activity, something I do think a lot of people are still sleeping on. Now, speaking of Ether, we do need to hop into the news and talk about the second largest stablecoin on the Ethereum network, and that is USDC. So we covered this previous weekend how USDC actually lost its peg to the dollar. And this was a result of the Silicon Valley Bank actually shutting down. There were $3.3 billion worth of USDC held at Silicon Valley Bank, which was equivalent to about 8% of their total reserve. So obviously this caused a lot of concern in the markets that USDC was going to be losing 8% of the cash they did have backing their dollar one-to-one. And when there was fear about the dollar not being backed one-to-one, what do you know? We depegged from the dollar, actually making its way all the way down here to 87 cents at one point. We did speak about the arbitrage opportunity if you believe that USDC was going to make its way back up to $1. We did not end up taking that trade, but that's okay because there were much better trades out there like Bitcoin and Ether to 20K and 14K respectively, like we were speaking about previously on the channel. Now we have seen USDC finally regain its peg here, and that is based on the announcement that they made on March 13th, saying that the U.S. Treasury Secretary Janet Yellen and U.S. prudential regulators confirmed that all depositors with Silicon Valley, which was closed by regulators, would be made whole. This effectively meant that USDC's total reserve would be fully available when U.S. banks open again on Monday morning. So this means that yes, USDC is still backed one-to-one because we have actually seen the U.S. government step in here to support these banks as they are collapsing left, right, and center. And we have the co-founder and CEO of Circle saying trust, safety, and one-to-one redeemability of all USDC in circulation is of paramount importance importance to Circle, even in the face of bank contagion affecting crypto markets. So based on this post here from the Circle co-founder and CEO, a lot of confidence has been instilled back in Circle. This quote-unquote stablecoin is regaining its peg, up 3.87% in the last 24 hours. And you would think here that we might see some calm, as we have seen the collapse of 2 US banks, which are being covered and protected by the government. And we've also seen the second largest stablecoin regain its peg to the US dollar, or close enough anyways. But no, the news does not stop there, as we have now seen the third largest US bank failure in history and the third US bank failure in March alone. This comes from Signature Bank, as it was in fact seized by New York regulators only 2 days after the shutting down of Silicon Valley Bank. So Signature is now the third largest bank to ever fail in the US, behind Silicon Valley Bank from last week and Washington Mutual from 2008. It ranks 29th amongst US banks. It had $88 billion in deposits as of that date, and of this $88 billion in deposits as of the date it closed down, approximately 89.7% was not insured by the FDIC. So for those of you that are unaware, the FDIC does insure up to $250,000 for every single client who has money in that bank, and any amount over $250K is not insured by the FDIC. However, given the turmoil here in the banking system and the collapse of 3 banks alone in March, it was decided here by the Department of Treasury, the Board of Governors of the Federal Reserve System, and the Federal Deposit Insurance Corporation that they would in fact make an exception in this scenario. So the following statement was released by the Secretary of the Treasury, Janet L. Yellen, Federal Reserve Board Chair Jerome H. Powell, and FDIC Chairman Martin J. Grunberg. Today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. I don't think people are a lot more confident in the banking system after what's happened in March. This step will ensure that U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. After receiving a recommendation from the boards of the FDIC and the Federal Reserve and consulting with the President, Secretary Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank in a manner that fully protects all depositors. Depositors will have access to all of their money as of today. No losses associated with the resolution of Silicon Valley Bank will be borne by U.S. taxpayers. We are also announcing a similar systemic risk exception for Signature Bank, which was closed today by its state chartering authority. All depositors of this institution will be made whole. As with the resolution of Silicon Valley Bank, no losses will be borne by taxpayers, effectively meaning here that they are going to be covering all of the losses from both Signature Bank and Silicon Valley Bank above the $250,000 increase. And even with the U.S. government stepping in here to protect these banks and ensure that the depositors' money is safe, people are still not trusting of these banks whatsoever. And that can be reflected in the volatility today that has been seen in the stock market, as bank stocks are getting their trading halted everywhere today. We saw the likes of Charles Schwab getting halted, First West Bank Corporation. I mean, the list goes on. We can actually take a look here on the NASDAQ website. And this once again highlights another big issue with traditional finance. Nobody can halt the crypto market for volatility, but they can in fact halt the stock market for volatility, which for the most part does screw retail over and not the big guys. So you can see here, Western Alliance Bank Corporation common stock halted, First Republic Bank common stock, PacWest Bank Corp. I mean, the list goes on here if you go down the list, but this is insane to see people just pulling out of these banks at such a rapid pace, obviously not trusting their money in them anymore. And we've also seen some very influential people in the crypto space also back up this notion that banks are also a risk to crypto now. So CZ, the CEO of Binance, here tweeted, "Banks are a risk to fiat-backed stablecoins." And then somebody responded, "The problem is Bitcoin is built to avoid such market situations, but if you mix crypto with fiat, you get trapped. You need the trap to grow, but one day I expect crypto to be fiat-free." And CZ responded saying there needs to be some interface for people to get in and out of crypto. Essentially kind of talking here about the fact that if you want to buy crypto right now, you have to move your money from a bank onto a centralized exchange. And this does defeat the entire purpose of actually having cryptocurrency to move away from the traditional banking system. And then somebody else responded here saying we need crypto-backed stablecoins. And CZ once again responded saying Do Kwon actually had the right idea, but just failed miserably on execution. And given from what I have personally seen from these algorithmically pegged stablecoins, stablecoins. I mean, I just don't think in any way that a stablecoin can be backed by volatile assets such as Bitcoin and Ethereum. But what CZ is highlighting here is a much more sort of important indicator that he wants to see crypto move away from the traditional banking system. And this does roll into the next piece of news, as CZ actually shared an article here that says Binance considers buying banks, bridging the gap between crypto and TradeFi. Now, this is an article that came out on November 3rd of 2022, and CZ quote tweeted it saying, "Is it time yet? Question mark, not sure," with like the shrugging emoji. So here's what the article had to say. The chief executive officer of the world's largest crypto exchange, CZ, said that traditional banks could be added to Binance's business plan as the crypto exchange seeks to become a bridge between traditional finance and cryptocurrencies. Facts: Zhao did not specify which banks might be under consideration, but said they are looking at financial institutions with local licenses, including traditional banks and payment service providers, in comments made in an interview during a web summit in Lisbon, according to Bloomberg. Global regulators are developing licensing regimes to regulate crypto, including in the United Arab Emirates, Singapore, and Hong Kong, which recently announced its determination to restore its standing as a crypto hub. Zhao said Binance's partnership with a bank usually results in a significant increase in the bank's valuation, and he hopes to reap the benefits of the increased valuation through such an investment. Binance's investment in a bank could be a minority investment or an outright acquisition. In October, Binance announced a $500 million investment to back Elon Musk's acquisition of Twitter. In June, they invested $200 million into Forbes, and Binance is continuing to pursue its global expansion. So you got to figure here, with all these banks crashing here now being traded on the cheap, this could be a perfect time for Binance to step in and actually go ahead and acquire one of these banks to finally bridge the gap between traditional finance and crypto. And this would be a very bullish move for Binance and the entire crypto industry, in my opinion. CZ did not stop there. He also tweeted here today, given the changes in stablecoins and banks, Binance will convert the remaining $1 billion of the industry recovery initiative funds from BUSD to native crypto, including Bitcoin, BNB, and ETH. Some fund movements will occur on-chain transparency. So for those of you that are unaware, the Binance Recovery Initiative was announced in late November of last year, and then it was effectively 1 billion BUSD put aside that was going to go ahead and fund some crypto projects that were struggling to continue operating throughout the bear market. He says here, collectively, we will be looking for projects characterized by innovation and long-term value creation, a clearly viable business model, and a laser focus on risk management. Now, the remaining of this 1 billion BUSD is being converted into Bitcoin, BNB, and ETH, and as indicated by the on-chain data, it is at about 985 billion BUSD left. So about 15 million of this BUSD had been used, and now the remaining $985 billion is going to be injected into Bitcoin, BNB, and Ethereum. So CZ taking another jab at the banks here, saying the transfer ID took 15 seconds and cost $1.29. Imagine moving a 980 million through a bank before banking hours on a Monday. So once again, taking another shot at the banking system here, trying to show the value proposition of crypto. And this effectively means that we now have $985 million that is going to be injected into the crypto space. And that is not a small amount of money. I mean, take a look at Bitcoin here with a market cap of 466 billion, ETH with a market cap of just over 200 million, BNB coming in at 48 billion in market cap. Sorry, did I say million on ETH? I meant billion, obviously. I mean, you guys can see here, though, that having $985 million injected into crypto is not a small amount whatsoever. And this could definitely be the buying pressure we need to see to break Bitcoin above 25K, Ether above 2,000 or 1730. And I believe that that is when we will see a serious move to the upside for the crypto market. So lots of stuff going on here. And as always, I do intend to keep you up to speed on everything that is happening in the crypto markets. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Monday. I'm wishing you all an amazing week ahead, and I hope to catch you in the next one. Peace out for now.